Hey, what's going on? Scott Taylor with SanDiegoRealEstateHunter.com. In this video, I'm going to lay out 7 or 8 awesome credit hacks that anybody can do that I've learned from looking at literally hundreds and hundreds of mortgage applications in the last 20 years. So whether you're looking at getting a mortgage loan right now, or whether you own and are looking to do a refinance, or you own and are thinking, hey, I might want to sell, but if I sell, then obviously I need to buy. And if I buy, unless I pay for cash, I need to get a mortgage loan. So whether you have a 500 credit score or an 850 credit score, or whether you make $25,000 a year or $10 million a year, if you're looking at getting a mortgage loan, I'm going to lay out some of the most important things and most often things that I see that you can do right now in the comfort of your own home without speaking to anybody else, and make sure that you're on track to get the kind of mortgage that you want. So number 1, a lot of people don't know this. You can go to annualcreditreport.com. That's annualcreditreport.com. It's the only source authorized that I know of from the federal law to get your free credit report. Now, something very important to keep in mind, and I didn't make this up, so don't get mad at me. It's completely lame, but you can get your free credit reports, but you don't get your credit score unless you actually pay for it. And frankly, I don't think you should pay for it. So here's what I normally do, okay? So we know that we have a TransUnion score, we know that we have an Equifax score, and we know that we have an Experience score. And you can get each one time a year. So here's what I personally recommend and something that I do. So let's just keep it simple. On January 1st, as a for instance, or thereabouts, I might go and get my TransUnion credit report from annualcreditreport.com. Then in May, so 4 months later, I might get my Equifax credit report. Then in September, I might get my Experian credit report. So I'm getting one credit report every 4 months, right? And then I just repeat that process every single year until something obviously potentially changes. But this way, I get my credit report once every 4 months. I can take a look at it, and if anything changes, then I can contact them. So number 2, please do not pay attention to the credit score, whether you got it from this source, whether you got it from, Credit Karma, Credit Sesame, your credit card companies, your banks, etc. You only use these sources to find out exactly if the debts on there are yours or not, okay? And I'm gonna get into more of these steps in a second, but you don't look at the credit score. Now, I've seen a lot of credit scores, and there's no rule of thumb, by the way. So I've seen a lot of credit scores that are lower using one source or higher using one source or different, okay? It is irrelevant in the mortgage business. Would you apply with me or any mortgage broker or lender for that matter, but I'm just using myself. When you apply with me, we use your credit report at that time, and we use your credit score and your debts at that time, okay? Whatever the credit score is with me is a credit score we use. Doesn't matter if it was higher or lower with Credit Karma, Credit Sesame, your bank, it's irrelevant. We use the report that I pull, okay? Number 3, verify all accounts that are on your credit report, whether open or closed, belong to you. Pretty common sense, right? So you get your credit report, you just make sure that everything that's opened up on your credit report that you actually did, let's make sure that everything that, is closed or paid off, you did. And if any of these are wrong, you call each of the 3 bureaus, let them know, and start the process. It's usually quick, actually. Start the process to have those removed, okay? Number 4, something very, very common is if you have any duplicate accounts, call up each of the 3 bureaus and report. So here's what I mean. I've seen, the same car loan by accident could be listed twice, or a credit card could be listed twice, or a student loan could be listed twice, or a mortgage loan might be listed twice, right? Or sometimes you might have done a mortgage refinance or a car loan refinance and paid one off, but it hasn't showed up and you've done it for many, many months, and you got a new one, right? So we might have a duplicate there, which, by the way, is probably showing up as far as duplicate debts and duplicate monthly payments. So if you see that on your credit report, call the bureaus and have that removed. So number 5, if you have a collection account or a charge off, obviously make sure they're yours and accurate. Now, this gets a little bit more confusing depending on which loan that we're going to go with. Are we going with the USDA, a VA, an FHA, a conventional, a jumbo? You're doing bank statements, you're doing something else, okay? But I like to speak in general so someone can say, hey, generally speaking, what would you do? Number 1, I would talk with your mortgage professional so they had an idea maybe what was going on to direct you. But here's my general rule of thumb. If you have an open collection, okay, if there's an open collection, I would call each of those creditors and say, hey, let's say you have one for $700 to, right? A common one I see is like a cell phone company or an internet company, or obviously the medical, right? If you have an open collection, you really want it to show up as paid. So here's what I would personally do. I would call up that collection, make sure it's real, and it's yours, of course. Then call up that company, the collection company that you have that shows up on your credit report. Let's say it's $700. You call them up and say, hey, I see that I have this collection account for $700. Okay, what I would like to do, I don't have $700, but I have $70. Will you settle? I have $100. Will you settle? I have $150. Will you settle? Like, you get the idea. They will settle if it's yours. They will settle for pennies on the dollar. Okay, they don't have anything from you now, so they will settle for pennies on the dollar. How much? I don't know. It completely depends on the collection company. Once they say yes, you get it in writing, you pay it off, and then you have it paid, and you go back to each of the 3 credit card bureaus and say, hey, this collection's paid. Here's the paid invoice, the receipt that says it's paid. Take it off my account. Now, if you have an open charge off, right? I'm sorry, or a charge off, generally speaking, I would say don't touch it, right? A charge off basically means the company said, we're not getting it. For past collections, we're not going to get it. It falls off usually something around that 7-year mark. Depends on the loan, of course. So I'm just kind of giving a general rule of thumb. Generally speaking, I say if you have an open collection, get it paid. If you have a charge off, leave it open. And then if the loan's coming down to, hey, we have this charge off, let's see specifically what we need to do on this charge off to get this loan done. Okay. Number 6, any debts not current, obviously bring current, right? So if you're late on a car loan or student loan or credit card debts or personal loans, etc., we want to make sure that we get current on anything that's 30, 60, or 90 days, okay? And then, obviously, too, something that I see is, hey, student loans, right, where supposedly it was being refinanced and something happened with Sally Mae or something happened with this company or that company, it's been delayed. Well, guess what? If it's showing up on your credit report as late, you want to make sure that you contact that company, say, hey, it shouldn't be late for these reasons. Hopefully you can get them to agree, get it in proof, and then go to the 3 credit bureaus, right? A lot of times these things can get resolved. You want to get things resolved. And then, of course, I'm not going to say things like, don't have a late payment. It's like, yeah, no kidding. So obviously you want to try your best not to have a 30, 60, or 90 days. Those are huge, okay? Number 7 on this, something that I see a lot is you do not want to go above your credit limit amounts. Okay, so what does this mean? Let's say you have a credit card and your credit card's for $5,000. And when I pull the credit report, obviously you have 0 balance, right? That's better. But let's say your credit limit was $5,000 and it shows it's $5,300 or $5,400. So you've gone above the credit amount, right? You do not want to do that. Clearly, it goes without saying, you'd rather have, $5,000 available with a 0, right? Or $5,000 available at $2,500, but do not go over that amount. That's a huge red flag. So always try your best to stay under that amount. So I think we're on number 8 now. Now, if you've had a short sale, foreclosure, bankruptcy, divorced, pay child support, or get child support, we're going to need all of that relevant paperwork. So obviously for short sale or foreclosures, right, if you just had one of those, you're going to have that paperwork. We want to make sure that you keep that paperwork. And by the way, for a bankruptcy, for instance, Well, actually, sorry. Let's go to bankruptcy. So if we've done a bankruptcy, Chapter 7 or Chapter 13, you have your bankruptcy paperwork. Then like for a Chapter 7, your discharge. So we're going to need everything from your Chapter 7, right? It's just usually 62 pages, I believe, plus your 2 or 3 pages of your discharge. If you've been divorced, then we're going to need the divorce decree. It simply says how everything, if there's alimony or child support or that kind of thing, we're going to need that. And I'm bringing it up right now because sometimes it shows up on people's credit reports. Or obviously, if you get child support, then potentially we can show that as income on a loan application if we get to that point. Okay, so we want to make sure that we have all that relevant paperwork, and sometimes, or a lot of times, that kind of stuff could show up on your credit report, so we're going to need it. And then number 9, there could be, tons of them, but why don't we just stick to number 9 right now? Now, number 9, if you do owe and I've helped loans with this, if you owe the IRS some tax money, right, it's not a completely dead thing. Generally speaking, what you should do is call up the IRS, or now you can go online to the website or go online to the website and set up, obviously, first make sure that you owe this and maybe go back to your tax accountant or your tax preparer or whoever did this, or maybe you might want to take, again, I'm not licensed, I'm just giving observations of things that I've seen, that you might want to first verify that it's accurate. And then from there, of course, you can set up repayment plans. Again, depending on the specific loan we go with, there might need to be a certain amount of payments made back on that repayment plan. But don't get freaked out if it's $25,000 or $50,000 or $100,000 and you're in a repayment plan and we have proof, right? So you're gonna have some kind of paperwork from the IRS, and then there's gonna be some payments from your account, then yes, we can do it. Then obviously that debt is gonna count towards your debt to income ratio on your loan. So there you go. There's 9 of the most common things that I've personally seen on hundreds and hundreds of credit reports. And I don't care if you have a 500 score or an 850 score. I've really seen this on everybody. Obviously, if you want to run any of your individual scenarios by me, please feel free to reach out via email, call, or text. And I look forward to chatting with you sometime soon.